Ever feel overwhelmed by all the investment choices out there? Well, today I'm breaking down ETFs and mutual funds in a way that makes it crystal clear, so you can decide which one fits your goals and start growing your money. I'm Jalen, and if you're new here, hit subscribe for easy to understand money tips. In this video, we're taking a deep dive into two of the most popular ways to invest, ETFs and mutual funds. By the end, you'll not only understand what they are, but the key benefits and drawbacks for each. And most importantly, what might be right for you. Let's get started. Let's begin with the basics. Imagine you want to invest into a basket of fruits instead of just one type. You get a mix that helps balance out one flavor that might be too sour or too sweet. ETFs and mutual funds work similarly. They allow you to invest into a variety of stocks and bonds all at once, which helps spread out the risk. An ETF or exchange traded fund is like a basket you can buy or sell on the stock exchange at any time during the day. Much like buying an apple at your local market whenever you want. But the difference between a mutual fund is managed by professionals, and you can only buy or sell at the end of the trading day at a price determined by its net asset value. This might sound simple, but these differences impact how you trade and what fees you might pay. Now, let's talk about ETFs in more detail. One of the biggest perks of ETFs is flexibility. Since they trade like stocks, you can react in real time based on market movement. For example, if you see a sudden dip on a good company, you might choose to buy more shares immediately. ETFs generally have a lower expense ratio, meaning the fees you pay are less, so more of your money is actually invested. Transparency is another strong point. ETFs usually publish their holdings daily, so you always know what you're investing in. However, this flexibility comes with a few hiccups. If you trade too frequently, commission fees or bid-ask spreads might add up, especially if you're starting with a small amount of money. To sum it up, ETFs are great for those who enjoy having control over their investments, want low fees, and can monitor the market throughout the day. Let's move on to mutual funds. These are often favored by investors who want a more hands-off approach. With mutual funds, you have the benefit of professional management. A dedicated fund manager is responsible for selecting the assets and adjusting the portfolio according to market conditions. This can be especially helpful if you're new to investing and prefer not to monitor the market every day. Mutual funds can also be easier to start with because many have low minimum investment requirements and allow for automatic contributions. It's perfect for building a habit over time. On the downside, mutual funds often come with higher fees compared to ETFs. They might also have less transparency since they typically disclose holdings less frequently, meaning you might not know exactly what's in your basket at any given moment. In essence, mutual funds are great if you're looking for convenience and professional management, and you don't mind paying a bit more for that service. It's like hiring a chef to prepare a balanced meal for you. You trust their expertise, even though it costs a bit more than cooking at home. Let's compare cost and flexibility side by side. With ETFs, that means more of your money stays invested, which is key over the long term. But remember, they're bought and sold on the market, so you might encounter trading costs if you're not careful. Mutual funds, while more convenient for a beginner, might eat into your returns with higher management fees. Flexibility-wise, ETFs shine because you can trade them throughout the day. Mutual funds offer less flexibility since you can only trade once a day. So ask yourself, do you prefer real-time trading, or are you happy with a professional handling things for you? Deciding between ETFs and mutual funds really depend on your investment style and goals. If you enjoy being actively involved, watching the market, and making quick decisions, ETFs might be the route for you. They're ideal for investors who want to minimize fees and have the time to manage their trades. On the other hand, if you prefer a more relaxed, hands-off approach, where you can set it and forget it, mutual funds might be the choice for you. They're particularly useful if you're just starting out and you want a professional to help navigate the market. Or if you plan on investing regularly over time without worrying about daily price fluctuations. Think about your risk tolerance, how much time you want to dedicate to your investments, and whether you're comfortable with the potential costs associated with each option. Sometimes a combination of both might work best to diversify your strategy. If you're already investing, let me know your own strategy in the comments. To wrap it up, both ETFs and mutual funds have their own unique strengths and drawbacks. The key is to align your choice with your own personal investment style, your financial goals, and how involved you want to be in the market. I hope this breakdown gives you a clearer picture of which option might work best for you. If you found this video helpful, please hit like and subscribe and share this video with anyone looking to start their investing journey. And I'll love to hear from you. Are you leaning towards ETFs, mutual funds, or a mix of both? Let me know in the comments. Thanks for watching, and remember, smart investing is about making choices that fit your lifestyle and goals. As always, I'm gonna catch you in the next video. Peace.